G'day guys, Julian here. We're going to jump into today's clip in just a moment where I'll walk you through a quick summary about our June purchases and what we're seeing across the market and just some general observations across the ground. But I guess before we get into that, I just wanted to touch on something that I know really matters for a lot of people, especially if you're in your 30s or 40s with a mortgage, maybe a couple of kids and you're starting to think seriously about the future and, how do I actually retire comfortably? So, there's a bit of a common belief that you can buy a few properties, hold on to them for 30 years and then live off the rent. But the truth is that approach rarely delivers the kind of freedom that people are really aiming for. So what I've done, I've put together a document that follows the journey of an everyday Aussie named Mark. He's not too different from any of the people we work with here in the business. He owns his home, he's raising a family, he's wondering how to set himself up for the next 20 years. And in this document, we'll walk you through a simple step-by-step strategy that shows exactly how Mark uses the equity in his home to build a portfolio and then transitions into a truly comfortable retirement. So once you finish the video today, I'd really encourage you to go check it out. The link is in the notes below. It's a valuable resource for anybody who wants more clarity and confidence around their financial future. So thanks for watching, and make sure you give that one a bit of a read. For today's session, I guess we're going to have a bit of an overview of the market, how we're going at the moment, and then also where we're buying. So where we're buying as a business over the last kind of month or so. The ideal yields is a question that's popped up. Getting some questions about Darwin as well. So we'll touch on Darwin, new home buyer schemes and initiatives, public housing data, whether we buy one expensive property or two cheap properties, houses and units, and a few more questions. So we'll just jump straight into it and having a bit of a review on the capital growth. So to give everybody a bit of an update in terms of how this one actually works. So rolling month change, essentially that the way this one works is how that market has moved in the last month. Then we've got the capital growth in the last 12 months. And then change since last mastermind. It's a bit more of a momentum thing that I'm just trying to keep a bit of an eye on. So that'll essentially be, so in this instance here, what it's saying is that since our last mastermind, Sydney was actually at 6.5% capital growth. So it's actually pulled back just a little bit. Now, that low of a swing is not really too much of a worry. But I guess it's not, again, not a worry, but it just gives us a bit of an indicator from a momentum standpoint. So what we can see here, pretty stagnant in most of the capital cities. Perth's pulling back a little bit. Adelaide's still ploughing through. Canberra's a bit of a pickup. Darwin's a bit of a pickup since the last one. But if we look at the last 12 months, so Sydney's up 6%. Melbourne is just gaining, and it's gained quite a bit in the last since the last mastermind. Perth and Brisbane starting to cool down because these numbers here, they're in the 12%, which is still 12%, which is still a terrific number to be at. If you can get 12% each year, it's nearly double kind of the long-term national averages. You're going to be quite happy. But these numbers were closer to the high teens, mid-20s for some of them as well. Adelaide's been pretty persistent. It's had a bit of a pickup in the last month though, which has kind of propped that up because it was starting to pull back a little bit more. And then Darwin's kind of pushed ahead as well over the last 12 months. Even Hobart it's done pretty well. National average just under 10% nationally and 7.3% as a capital city average. So we're kind of ahead of the longer term averages from the capital growth standpoint. Normally nationally you kind of sit at around about 6 to 7% kind of longer term. So above the average, which is nothing to kind of sneeze at. And one thing to keep in mind there, that is whilst we're apparently in crazy high interest rate environments. So despite all this external noise and negative news and all these reasons why you shouldn't be buying property and land tax and all these things, the market's been really, really resilient. So it'll be very interesting to see what lies ahead with some changes forecasted to happen. We go into the rental growth side of the market. So we like to just keep a track on the rental growth. So Sydney market started to move. Darwin has picked up quite a bit since the last mastermind as well. And that's kind of no surprise as well because they've seen some good capital growth, same as the Hobart market. But the change over the last 12 months, really the strongest growth there are Canberra, Darwin, and Hobart markets have been pushing the strongest. Nationally, we're just under that 5%, and capital city average around about that 3.4. And this will be a bit of an interesting one to see what kind of happens over the next 12 to 24 months, I should say, in these markets. Because, I mean, historically speaking, if you start to see rate cuts or rate slowdowns, you would start to expect that rents will start to steady a little bit, because landlords, though if you read in the news that they're the ones trying to extort and get more rent from their tenants, in general, they're looking to just cover their cost base. So that's not necessarily the case. But what we're seeing at the moment is that vacancy rates are just still crazy tight just about everywhere. Less than 2% across the country, less than 1% in a lot of locations. So it'll be interesting to see, because you're likely to going to see a lot of first home buyers really hit the market with some incentives and consumer confidence off the back of interest rates, which we'll touch into a little bit more. So it'll be interesting to see what happens in this rental market, because particularly if the buying side has more first home buyer demand, you're going to then lose rental properties. So you would naturally expect, if there's less of something and demand is really high, that might push the rental price market as well. But bit of an overview on that one there. Rents are pretty steady. Perth's continuing to kind of stabilize a little bit, which it just had parabolic growth. It's still no, I guess, fundamentally for clients who have maybe purchased in Perth previously, there's no flashing red warning signs on our end saying that we need to get out of Perth. Still plenty of people buying in Perth, ourselves included. But, it's just not running away at 20, 30% growth rates, which are unsustainable levels. And then rents in Sydney, Hobart, and even Canberra pushing along pretty strongly as well. But that's a bit of just a recap in terms of where the market's sitting right now. In terms of where we are purchasing as a business, so we've updated the Wagon Wheel. Actually didn't, I should have taken a note of where we were purchasing the last mastermind, but I don't think there's been too much of a change. Got the lion's share sitting really comfortably in Victoria now. So 72% is sitting in Victoria. We've got 3% in New South Wales, and that's pretty much solely in regional New South Wales. We've got 9% pretty equally spread between Queensland and WA. And then little Tassie is still kicking on 7%, keeping in mind for those who haven't been here for some previous masterminds, is that 7% to be represented that from Tasmania. It's a smaller market in Tasmania, so you're never going to see Tasmania represent this kind of a large portion on this Wagon Wheel. There's just not enough opportunities for us to really kind of do that as a business commercially, but still, really good representation. Still more towards the north of Tasmania, keeping a strong eye on Hobart. I've got a personal interest in Hobart. Going to be very interesting. Be good to know any Hobart locals other than Jacob and Anna, in terms of what's the real appetite down there. Because I feel for a lot of investors, the Hobart market, what will pull the trigger down there for Hobart to get interest kind of at a national level will be what goes on with that stadium. Because for everybody on the mainland, football is the number one sport in the country. Sorry to anybody in Sydney that thinks it's rugby league. It's quite comfortably AFL. And it'll be very interesting to see, because I feel a lot of even locals, if that I guess that infrastructure spend isn't put into the stadium, potentially for mainland investors, they might say that's the last chance in terms of investing into Hobart. Could even be locals saying that's the last chance. So it'd be very interesting. I think it's kind of two sides there. I think the locals want that money spent elsewhere, and some others want to see, tourism dollar coming in. And again, I'm not versed enough in the politics of Tassie, whether it will or will not go ahead, but I think they will get their football team. I think we're pretty far down the road to pull out now, but we'll wait and see. But bit of an interesting one. And then in terms of a bit of the breakdown for the purchase summary for us, so the median purchase price, this has creeped up a little bit. I think we're at 570, 576 maybe the last one. Median yield's pretty steady at 4.9%. Build date 1980s, median land side 675. So all these numbers pretty stable, slightly creeping up, and I will touch on this one later on in terms of the median price as well, because there's some questions that will tie into that a little bit. And then one of the feedback we did get from the previous session, it was good to see some pictures or some examples of previous purchases that we've done. So I guess for the privacy, we don't want it to be disclosing locations or addresses for the client's sake, but also for us protecting our IP in terms of where we're buying precisely. But this one's on the lower end, so this one's a regional purchase in Victoria. 3 better on 560 square meter block, purchase below advertised price. Not that for those watching at home, advertised price means absolutely nothing. It's just purely the tactic that the agent has deployed on that marketing campaign. 360 a week rent, so 5.8% yield. Obviously a bit of an older property, but when we're talking about a purchase in the 320s, there is still the odd purchase out there below the kind of 350 price point, which still gets you into an actual house. Not talking apartment, not talking about half of a house or a quarter of a house, an actual freestanding house with a pretty healthy yield in a higher growth location. And when we come up a little bit, so we're coming up to our median. We're looking here more of that 4-bed, 2-bath configuration. Again, large land size, good yield, just under that 5% mark. But we can see this one here has been had a bit of a renovation done on the inside as well. It was a fresh kitchen and bathroom. And then we go to our highest purchase for the month that's just gone. So that one is up in Queensland, around that $1.35 million mark. 4-bed, 2-bath, double garage, 700 square meter block. You will see now at the moment that in that Queensland market, metropolitan Queensland, let's call it, the yields have compressed. So they're up around that kind of 3.5, 4% mark at the good end now. So the higher yields at metropolitan Queensland was maybe offering, they're well and truly long gone. Doesn't mean we don't anticipate any growth to still come to those markets, but bit of a slowdown on the yield side of things, which is normal. We're seeing rents kind of steady, house prices moved faster, so as a result the yields get compressed. But that's a bit of a snapshot. Thanks again for watching, guys. Just a quick reminder, make sure you check out the link in the notes below to access our Path to Retirement Blueprint. It's a really powerful guide. It's going to walk you through the exact strategy and everyday Aussie used to turn home equity into long-term financial freedom. So, again, once you've had a chance to go through it all, there'll be an option to book a call with one of our experts to chat about how this could work for you based on your goals, your timeline, and your starting point. So take a look and book in a call. Catch you guys in the next one.